Horns. I'm Daniel Cooper. Glad that you could join us today. Today we're going to be looking at a couple of stocks that you'll really want to watch here in the next few days. They've had a lot of stuff going on with them recently, so let's go ahead and begin. Let's start with a company by the name of Priceline. Now, Priceline.com was up a staggering 6.3% today to close up almost 30 points at $487.58. This is a chart of Priceline, ticker symbol PCLN. The online travel company stock has been trading below its 50-day moving average, which is that blue line there, and was fast approaching the 200-day moving average, which is this red line here. Now, the rebound was caused by a combination of factors, the major one being that indexes such as the Dow, Nasdaq, and S&P 500 saw a positive rally today. The S&P 500 actually bounced off of its 200-day moving average, which was a critical point that we've been talking about over the last few days and weeks here. Usually when a stock sees such a steep jump in price, it's wise to get some confirmation of the direction of change in that trend. Now, tomorrow could possibly be a flat or even small down day for Priceline. However, if the uptrend doesn't continue into Thursday, be careful of a pullback that could exist here. Priceline's competitor, Expedia.com, ticker symbol EXPE, is making strides towards its 52-week high. This is a stock chart of Expedia.com. Now, it closed today at $28.28, and as you can see here, it's getting mighty close to its 52-week high of $29.85. Another stock that we're going to look at, one that we've been talking about recently, is Apple, ticker symbol AAPL. Now, Apple recently fell below its 200-day moving average, which again is this red line, and we can see here that it fell below that average and then gapped down towards $310 a share. On that same day, the S&P actually bounced up from the 200-day moving average. Now, that divergence from Apple looked extremely bearish and caused a lot of concern. However, today, Apple followed suit of the S&P 500 and made a large jump to close almost 10 points at $325. That move was really required, or else Apple stock would have likely fallen to about $300 a share. Now, out of many of the tech stocks out there, Apple has been described as a value play, which makes sense given its strong brand and moderate fundamentals. The last stock that we're going to look at today is Research in Motion, ticker symbol RIMM. Now, Research in Motion, as we can see here, recently gapped down from the $35 range into the $26 range. However, today, RIM moved up over 10% to close at $28.55. The market helped fuel the move. However, rumors of a potential buyout were also attributed to the jump. Research in Motion has seen market share taken away by competitors, and management has been unable to come up with a strategy to get RIM back on track. Rumors of a buyout are simply not supported, and RIM will have to provide some information to investors that it really can turn itself around and that management is going to have a new vision for the future. So here's a few stocks that you'll really want to keep an eye on. We're going to see some major changes here coming in the future. We'll want to see if these stocks, the ones that we talked about earlier, will be able to stay above that 200-day moving average, as the S&P 500 proved that it was able to here recently. So definitely keep an eye on these and, use this information the best you can. As always, go out there, go grab the horns.